hey, 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 or hey, I forgot how that guy did it. Anyway, welcome to another exciting edition of the weekly AMA, weekly Ergo AMA. It's very important to be very specific about these things. And with me, I have QX. Just say hi to everybody, QX, since you're Poncho.
Hi everybody.
And your abyss background, your abysmal background.
Hi everybody. Welcome to the AMA today. It's great to be here with two such fine gentlemen, the best gentlemen in the ecosystem.
Well, you're going to let me introduce the other gentleman? I mean, I haven't had a chance to introduce him. Does Joe
even need an introduction? I mean, it's Joe. He's like Joe.
It's etiquette. It's etiquette.
All right, fair enough. Go for it.
Okay, it's just etiquette. And with me, don't say anything, QX. With me, I have Joe Armeanio of the Colorado Armenios. Say hi to everybody, Joe.
Morning. Hope everybody's doing well. Ready to dive in. It's been a good week in the ecosystem. I was pretty happy to go through the dev update yesterday. Looks like we have that exchange initiative. So those of you that are out there that are interested in contributing, how do you pronounce that, QX? I have no idea.
I can't even read, Joe. You keep asking me how to pronounce something?
Yeah, Joe, come on. You ask too much of him.
Like Segex, but that might be wrong. Eggs. I have no idea how to.
Well, I don't know. Whatever it is, it's an exchange listing. It's cheap. You can do it, and so you can do it.
You know, at the end of the day, the most valuable thing about listings is liquidity, right? So those of you that are in the ecosystem that want to be more active in, let's say, promoting, trading, taking some risk on that sense, please contribute. You know, Ergo is doing pretty well in terms of the TVL in the ecosystem. I'm pretty excited to see both Gluon and Dexy kind of pushing towards mainnet. Those of you that don't know, those are stablecoin protocols, and you know, a stablecoin protocol basically tries to use like a reference asset or currency and peg itself to the price, right? So one of the neat things about having like a custom stablecoin protocol is long term, you know, if it's shown to be resilient, you have the ability to plug in new data. So you know, let's say we start with Gluon Gold, right? Well, if that, you know, demonstrates resilience long term, you know, why not have Gluon Silver, Gluon, who knows? You can plug a variety of commodities, currencies, etc. into these frameworks, and you know, potentially create kind of like a new version of synthetic asset or derivative on Ergo, which is pretty cool. I saw Janet Yellen was talking about stable coins, but man, she looks like a turtle. I don't really pay much attention to her.
Well, what are you laughing at, QX? So do you. You kind of do. You kind of do. Anyway, lots of exciting stuff.
Gluon oil too, right? There was talk about.
I mean, why not? Well. It's quite interesting. You know, a lot of that has to do with like getting into this idea of crypto-backed derivatives, which is quite an interesting concept, I guess, because you have, I don't know, I guess if you're looking at like standard derivatives, we have the ability to kind of create some new and unique frameworks. If you're talking about, you know, over-the-counter derivatives in traditional financial markets, they're basically a clusterfuck. There's no known chain of risk usually, right? You don't know who the counterparties are, and if something explodes or implodes, you know, it's hard to predict, you know, let's say where that cascade is going to end up, right? And so if you look at something like chain cash, long term, one of the really interesting concepts there is you have clear chain of custody and kind of clear risk profiles with free derivatives that anybody anywhere can potentially interact with or use as a form of credit or collateral. fascinating idea. It's interesting to me looking at like how I don't know, opaque a lot of things that are seen as not dangerous are. And then if you try to build something on chain with clear assumptions, that's, well, dangerous.
Yeah. It always is. It always is when it's a danger to the legacy cabal. So all right. Well, how about you, QX? What have you been doing? Have you been doing anything? What are the SIGs up to?
I've been spending the SIG's treasury money on first class tickets across the world to, that kind of thing. Only joking. We can't even, it's hard enough to sign a multi-sig transaction. As Louis said, the most secure thing about a multi-sig wallet is getting everybody to sign in sequence or at the same time. What have we been doing? We've been really busting our humps with this market maker chat. Cannon, Austin, myself, Joe and Glasgow are also in some of the chats. We had a kind of a clarity meeting with one of the firms yesterday, which really helped open our eyes to what their intentions and what they meant by a loan. So there's a couple different ways you can interact with these market makers. You can pay them a set fee a month. You don't get it back. You pay them for the service. You provide liquidity. They do their thing. Done. There's other things where you can, if you want to get greasy again, you can pay them a monthly kind of retainer, give them liquidity. They try to make back that retainer and pay it back to you, and then they take profits off whatever is beyond that retainer. That's another method. Then there's a loan method, which kind of had us confused. It's more of kind of an options call. So what they do in that case is they say, okay, look, if you don't do any market making right now, you're probably not going to be attractive to large buyers because you can't buy more than 1,000 Ergo at a time. And it's going to, nobody's going to come in and buy that much because somebody could just rug after they buy 20,000 Ergo, 30,000 Ergo, and it's going to spike the price, get lots of sales to dip it again. So you're losing out on that kind of thing. So the way the market maker says is say, look, if you market make with us and you give us a decent amount of liquidity and you loan that to us, essentially, we are going to make a call option on a European call option on the liquidity that you give us for a strike price of 20%, 30% more. So if, let's say, ERG's $1, you making a contract with this market maker that says when it's $1.20, they have the right to buy as much as they want from that liquidity that you gave them. No more than that liquidity, only that chunk of liquidity that you give them. They can buy whatever they want from that strike price. So their incentive is to do a great job market making, provide enough on the top side, and so people can buy without worry. And hopefully the price naturally rises up to that 20% amount and more. And then whatever they haven't used to of that liquidity that we're providing them, after that strike price, they have the option to buy whatever they want above that strike price from that liquidity. And then at the end of a couple months, the cycle starts over again. If the price is higher, then you set another call option for 20% that price, and you fill up whatever they bought from that initial pot so that you're back to that same amount again. So that was an interesting perception on or understanding that we got yesterday from the loan type option there. That was new. So we've got a lot of options to talk about what we decided to do instead of making it a kind of spaces we talk to you on Twitter thing about it. And we know a lot of people don't like to come up and talk. We're just going to make a little bit of a presentation for you in text format with a PDF. We're going to pop it in main chat during a specified time. Myself, Austin, Cannon, hopefully Joe and Mark, if they're not too sleepy, will be around in chat as well, and we'll answer any direct questions you have from that thing. But we really want it to be a discussion amongst yourselves, discussing what options you think are the best for that kind of thing. Once we're done with that, we'll take a chat GPT essentially of the entire chat for the hour, and we'll try to group like points together and see what the community is leaning towards. We'll also do some sanity checks, of course. Can't really rely on AI all the way. And then from there, we will vote to create a proposal where we will most likely propose to the Ergo Foundation a borrowing or a loaning of liquidity to achieve this, depending on what we need. If it's not enough, then we will probably come to the community as well with this proposal and try to fundraise for that. Now, let me remind you, for some of these options, like the option where I said where they take a retainer and they pay it back and then they take profits off the top of that, and like the loan call option that they do, some of that money will come back with the loan option, and most of it should come back with the retainer option. So even if the community fundraises, we will have a method to pay you back some of that as well, or all of it, depending on what the proposal works out to be, depending on if we're trying to raise funds and put that back towards a bigger listing, all that kind of stuff. So those are the steps that we're going to try to take. Hopefully we can do this chat in main chat in a couple days, maybe on the weekend, maybe tomorrow might be a little too early, but we'll give it a go and we'll go from there. And I mean, worst case scenario is it's too much, or the community thinks it's too greasy to try to, do this, and we don't do it. But at least we discussed it and we have some data to put forward when people come in and say, how come there's been 15 minutes between the last buy on Huobi, or that kind of thing. We can say, well, this is why, because everybody in the market is buying these market makers that do these kind of trades that make it look, nice, and every couple seconds there's a trade, and we don't, because we're purely organic kind of thing. So either way, I think it's a win-win either way, honestly.
Yeah. Sounds like you guys got stuff cooking. Market making, some people might find it kind of odd. You are right that people people want purity. Some people want purity, and there's like, oh, well, it just needs to be all organic. It needs to be it needs to be organic supply, demand, and buying and selling. And I see good market making as almost like directing, fortifying your shores and directing the flow of the river. You're not necessarily damming the river. You're not necessarily draining the river. You're just kind of like making sure that it doesn't make the walls crumble and make your house drown. So that's kind of like I see it. Some of them might want to dam the river. Some want to empty the river. Some want to change the river's direction into wherever they want it to be. But good market makers is going to let it be and just going to make sure that it flows without flows in an optimal way without really causing damage to the surroundings. Hopefully you will find that type of market maker. All right. So from my end and from the Zengate crew end, we are now at, today was the last day for Catalyst voting. So that is closed. And as you all, or most of you hopefully know, that we had there were several Ergo-based initiatives in Catalyst working with Cardano. Several came from the JED Alliance. And one of them actually came from a collaboration between Zengate and Rosen, which is the Rosen EVM bridge. And I believe, and of course, this doesn't necessarily guarantee anything. But I believe it received the most votes in its category. Was that where it left off, Joe? Have you checked?
Nope.
No. Okay. Well.
Nope.
Well, last time I checked, it was, and for a while it was the last day or so, it was actually the number one proposal in its category. So meaning that it's got the most votes. Now, of course, with Catalyst, you don't know, you could have 1,000 votes, but they could all be really small wallets. And then somebody's got 10 votes, but they're really big wallets. So, again, most likely we're okay. But I would, I won't, what do they say in the country? Count the chickens before they hatch.
Yeah, I think it's eggs, or maybe it's chickens.
Eggs before chickens before they hatched. Anyway, yeah, let's not break out the champagne just yet. It's going to be about a week until we actually see the results. I have strong hope and feeling that we did okay. And if we did, it's going to be awesome. We will be rolling. Well, either way, we're going to be rolling Rosen into the AVM ecosystem. But with these funds, it's going to be a lot easier for us to do it in a much more streamlined and efficient way. So yeah. And plus, of course, all the initiatives put out by the Jet Alliance are amazing, and I really hope that they get funding. It would be really cool if we got several Ergo, several projects that started on Ergo and went cross-chain and went into utilize both ecosystems, get funded by Catalyst. I think that would be really cool, and they'll actually, just like what happened with Rosen, kind of move liquidity into the Ergo ecosystem. Something happened today. I forgot exactly what it was, but somebody put up like 100,000 ERG bond or something. What do you know? What
somebody moved 100,000 ERG over the bridge, or started to, but we had a little liquidity unforeseen.
Well, Rosen is designed that way, right? When you have we use basically an exchange tactic, which is where you distribute funds across hot and cold wallets, right? And so what we do is we have thresholds where, if you send a transfer larger than, let's say, the threshold that's set, it requires you to go to the cold wallet, top up the hot wallet and settle the transaction, right? That's a security mechanism. I think that, some people, if you have a lot of funds at risk, in terms of like what you're moving, I think, having greater value, have that extra security thing is quite important.
Yeah, I mean, imagine if you kept every single Rosenerg in the hot wallet.
Yeah,
you're done.
Well, it creates a honeypot, right? That's something that makes it more attractive to attack. And so our goal is to say, okay, well, by using this cold hot method, you only have so much, available in kind of the hot wallet, which in and of itself, takes a lot of management from multiple parties to clear. So I think we'll be fine. Not a worry, but that's the tactic that exchanges use, where they limit their liability essentially.
Yeah. So all it involves is the guards topping off the hot wallet from the cold wallet, and then after a certain amount of time, the code will retry the transaction again across the bridge.
Yep.
All right.
But just to point out that was a good payday. It was funny. The HQ, I believe, popped his bot into chat saying, "Oh my God, somebody just threw 100,000 across the bridge," and I was like, "Oh shit, is my watcher running? I better go check." And I was like, I guarantee like 77 people are running to their computers like, "Shit, is my watcher watching? Let's make sure to get in on this permit announcement."
Yep, good times. All right, let's get into some questions. Let's see what is a good question to take off on here. Okay. I saw this. Hold on. Okay, fine. I didn't want to start with with a question for me about Zengate, but I guess we could start with that and then move on to another question as soon as I find it. So one for Dan. It's also the top one here. Can you expand more on Zengate hiring Lamont Ruten and what this means for the future of Palmyra? Yes, I can. So Lamont coming on as an advisor for Palmyra and for Zengate is really huge. The reason being is because Lamont is a really heavy hitter in the commodities sector. This guy was he literally built several of the largest commodities exchanges in the world. The second largest one by volume when he was still running it, the Indian Commodities Exchange. He built one in Indonesia. He took them to IPO. He was the director of commodities for the UN. So this guy knows his stuff. He knows how to make these things big. He knows how to build big. And the aim of Palmyra is to make it big. And this is what I've been always saying. One of the reasons why Zengate was started and why I wanted to do it myself is because I felt that Ergo needed a chance to have a global enterprise level solution in its catalog, if you want to say that. And I always believed that this would be the way to do it. It just seemed, in my mind, it seemed really synergistic with the way Ergo is built, the way Ergo works, the way the way NFTs on Ergo work, the way you build on Ergo using all the tooling and everything. So to me, it made sense. It doesn't mean that it's the only way to use Ergo, obviously, but to me, that made the most sense. And so Lemon is basically our key to making it so I had this vision of making it global, right? Making it one of the biggest ones in the world. He can help us do it because he's done it before. Like he literally has done that before. So it is very crucial because now we have somebody who has done what I dream, what I am aiming for Palmyra to become. He's done it with other places. So I think it's fantastic for Zengate. I think it's fantastic for the ecosystem because it's like having Mr. Miyagi join your karate training. It's like the guy knows his stuff. It's Lemon. He's like an encyclopedia of knowledge about this stuff. He has almost 40 years of experience in the sector. He has something like 30 years of papers and materials that he wrote. There's literally, I think he sent over some of the materials that he wrote, some of the papers that he wrote, something like 300 pages. He wrote 300 pages of papers on commodity trading. He was thinking about tokenization. He was thinking about it 20 years ago. He was just not. He was saying that what you guys are doing, I was thinking about 20 years ago, but the technology just wasn't there. The technology had to catch up with the concept. But because he thought about this for 20 years, now he can say, okay, but you know what? This actually will work. This won't. I thought about this for 2 years. He thought about this for 20 years. And he's a hell of a lot better at commodities than I am or anybody else on our team. So I think we're really excited about this. Not just because of the name, not just because of the resume, but because of the real opportunity to take Palmyra global and with it give a global enterprise big time use case to Ergo. So good stuff. Really good stuff. All right, let's see. We had some questions here that I wanted that are not for me. Let's see. Okay, well, here's an interesting question from Luke Graysmith. How do we achieve one person, one vote while allowing anonymity? How do you prevent me from making alts? So there's more of kind of like a more of the blockchain voting governance philosophical question. So
no, that's always hard to have a purely democratic system. And even if you do have a purely democratic system, who's to say there's not money in the back end buying votes, right? Like let's say in theory we achieve pure one-to-one voting system, right? Then that in and of itself has attack vectors as well. Personally, it's one of the things I like about proof of work. like it's energy input, which, means it's somewhat cost based, which means you have a greater kind of incentive to, let's say, change network parameters in a way that, works in your favor, right? That's one of the things I like about Ergo's governance kind of on the base network configuration level is it really depends on a combination of, let's say, combined hash rate and, well, luck. If you're talking about like purely democratic governance, that, is ideal, but also, sometimes people are quite hard to engage, and you also have attack vectors there too, right? So, I don't know. I tend to think like in open ecosystems, really the biggest question is who's contributing, right? Let's say you have a application that has a DAO and you have some conflict in terms of like design pattern or what to do. Well, if it's truly open source, both ideas can be realized and compete, right? Now that in and of itself takes work. It would take work to, implement changes, put, the alternative on chain, even if it's a minority. That ultimately, at the end of the day, I respect work more than opinions, but that's just me.
I've thought long and hard about that kind of stuff, and the best I could come up with that would be less tainted and very grassroots with some sort of web of trust, essentially, where you need, even anonymously, you need to start from somewhere. So the voting would start, or the not bid, but some sort of identification would start with core members and already established people in chat that we know are actually people. And then from there, those people invite other people and give tokens to other people, and those people give tokens to other people. So you have this kind of seeping effect of trust. So I may not know the person 10 people away from me, but everybody in between knows that person 10 people away, or the person closest to that 10th person knows them, person behind knows them. So there's anonymity there, but still, even in that case, you could corrupt it, with that kind of thing. Give it to somebody who owns a company with 100 people, and then they trickle down voting through that kind of thing, and then they sway all those votings. But yeah, that's a tough cookie to crack, that's for sure.
Well,
And
you're talking about civil resistance, in a way. I mean, that's kind of the basis of our industry, right?
Yep.
Like with Rosen, how did we, create a friction there? Is it possible to run multiple watchers? Yes, but it comes at a cost. Right. And so then you get into like the incentives of doing that. If you have a big transaction coming across the bridge where, QX is now running to check to make sure his infrastructure is up because he hasn't been paying attention, maybe it's worth someone running two watchers and having two permits because they get a larger share of that. Right. But then they also have to kind of carry the assumption that might not be a common transaction. Right. So it's always trade-offs. I don't really care if it's proof of work, proof of stake. The one thing I generally like about proof of work is just kind of this idea of like a random fair game lottery, let's call it. But that's a big question that I would say the blockchain space as a whole addresses in a lot of different solutions for, civil resistance.
Yeah. Before actually, QX, did you say anonymity?
I said whatever the anonymous word is that ends in imity.
You said anonymity. You did. I heard you.
Anonymity, like Finding Nemo, right? Anonymity.
Yeah, no, it's nothing has to do with Nemo. Well,
I told you don't ask me how to pronounce Zegex, and I looked it up. It is Zegex.
Don't ask you how to speak English. It's not
that
like
too damn
language or anything. Anyway, I think that, just to add to what you guys are saying about anonymous votes, one person, one vote, there's always going to have to be some sort of either incentive structure or verification in place, even if it's anonymous. And I think that is actually something that ZK proofs can do. especially if you're talking about something that's more along the lines of, I'd say, if we get as far as governments doing blockchain voting and doing this kind of voting system, this kind of governance, on-chain governance. I don't believe there's ever going to be a time when a nation state would ever allow purely anonymous voting, even if they were super libertarian, super privacy centric, all that stuff, all the stuff that we love. Still, it's just not realistic to think that anywhere in the near future or even in remote future, a nation state would allow purely anonymous voting. So it would have to be a combination of incentives not to screw around, or it would make it expensive to screw around, plus a combination where you would have verification through ZK proofs, which would basically still guarantee for virtual anonymity. You could but you would verify in an encrypted way. You would verify that you are in fact who you are, and then you go from there. And again, it's not pure anonymity, but it is anonymous enough, and you can design a protocol to basically be able to verify the data without actually leaking the data to any entity.
Yeah, I mean, you could also have some sort of system where there's pooled anonymous people. So essentially, signing up for a service and designating an ID to that person, and then the pool of real IDs are collected. So we know that there's this many people out there that have these IDs essentially, and then your voting is still anonymous because your real ID is no longer attached to your token identification. It's just there. So I mean, technically you could sell it, of course, if you wanted to, but then you'd give up your right to vote because you couldn't access that anymore. But yeah, so there's other ways to do that too, I guess. But yeah,
governance and consensus tend to be messy. But
yeah.
Just start there, and do your best. It's just true.
Yeah, we just need to have to have Nautilus start capturing usernames and email addresses. Then we'll be all set.
QX, actually, somebody told me to be nice to you.
They did? Who's sticking up for me?
Yeah, Billy O says, I'm rude to you and I have to be nice to you.
I do love it, as Dan says. Dan, this is the way Dan expresses his love for people. And if I'm getting hounded by Dan, I know in my heart that Dan is so in love with me, it's not even funny. It must hurt him so much. So I take it with pride. I take it with pride. Look,
this is not shtick. This is real. I'll send him Telegram messages that are literally the same thing.
Oh yeah, yep.
I will razzle this guy on Telegram for days, and he loves it. He loves it.
I do. I keep coming back.
Yeah, exactly. Anyway, let's get to another interesting question here. We got a few. All right. Well, we had a few. Okay. Here's a nice one. So, I don't know. Any update on subblocks?
Yeah, for prototyping. That's something that Alex and I have been talking about quite a bit lately. Has been, this idea of side chains and what's kind of the short-term, long-term future of that. I think there's a lot of interesting things we can play with and explore that. I don't know. My personal hope is that we can take the Sigma framework that we've been building for way too in crypto years forever, right? And actually make it more portable. We've seen this idea of EVM compatibility, where they built kind of a base programming paradigm, and then kind of it's grown into a multiverse of different chains and applications, and it's really spread. So side chains are an interesting idea in terms of taking the Sigma framework and creating new environments, right? And one value to that is this ability to kind of have independent experimentation, right? Sometimes if you make a, let's say, controversial design decision, um, it becomes a systemic risk potentially, right? And so it allows us to create this external environment where we can potentially play with, more modern, let's say, less stable or long-term proven zero knowledge proofs, or maybe we can play around with just different network parameters, right? So sub blocks and side chains kind of go together, and it opens up this idea of playgrounds, right? And so long term, I think it would be really cool to have multiple playgrounds, because in my mind, it creates this environment where if something is shown to be resilient and or useful, we have the ability to potentially update, the main chain, and potentially allow for kind of like a universal update if it's something that is proven to be quite useful. So it's ultimately an interesting idea in terms of like the longer term evolution. Now, if you're talking about specific like sub block prototyping that's underway, then everybody's naturally goes to win win win. And I don't know. With Rosen, I said 2 weeks, but sub blocks is a little bit more of something that needs more time testing. I hope it's something that comes with debate, right? And that's actually one interesting thing about kind of this whole trustless sidechain idea. And it kind of goes back to like the governance question I asked earlier, is that if if I have my heart set on something, right? And everybody says, no, that's a stupid idea, right? Well, I should have the tooling to where I can go build it myself and test it. And I think that type of environment, it creates a lot of interesting thought experiments and competition, which is cool. So that's something that we're prototyping right now. You can follow the weekly dev updates. I'm sure we'll probably have more chats. Let's like call this the 6.0 roadmap. And so I think we would probably like to package some things that developers might want or need, on the application level. Potentially make that a part of like this roadmap. It should be based on feedback, not so centralized, right? So that's kind of the direction we're marching in. If that makes sense.
I get really excited about that framework just because it opens up so many things that you can't even think of. Like imagine some sort of, if you don't like the parameters of the current change and you want to be able to tweak it more without some sort of doing a fork or anything like that, there could even be a whole ecosystem of Comet side chains or Greasy Sex side chains where they have their own parameters and assumptions, and you do things. You do things there. Maybe there's faster blocks on the Comet side chain, or maybe there's blocks that get paid out to a treasury differently on there, or that kind of thing. So super cool assumptions there. And what was I going to say? I was going to say, as you were speaking about the dev update, Joe, I just want to announce publicly, so Joe can't rug us, that Joe Cheese and Arochobi, however you pronounce his screen name, are going to join me on the dev update this week. You can't back out now, Joe.
Oh,
Joe's like, shit, now I'm fucked. I've got the text to prove it, Joe.
That's one way to do it.
all right. That's all right. Oh, hey, we got this Sam Lambert guy, whatever his name is. Any discussions for proof of useful work these days would fit into that sidechain framework discussion earlier? Have there been any discussions about proof of useful work? Joe, QX?
Yeah, I would say in theory, you could create a useful work sidechain. Now, I long term, I think proof of useful work is an interesting idea, right? But it also creates interesting questions that oftentimes are not asked, that sometimes I like to talk about and are not popular. But I'll get into them. Why not? The first question is like, okay, so how do you determine usefulness if you're talking about like an external service usually or problem, right? Now on one hand, you can go into this idea of like decentralized science is one thing that people have talked about, where you kind of collect computational power, you throw it at some potential problem, and then collectively over time, you run simulations over and over and over again, collect data, yada yada yada, right? Well, the question I would have is, okay, well, let's say you get to the point where number one, at what point is that done? What's the monetary value to the miners? If you're talking more like a service oriented model, where it's like, okay, well, we're going to train a learning machine, or have some decentralized service there. You're competing with companies that are throwing very large salaries at high quality engineers, and that's going to be hard to like compete with long term, in my opinion. And then we have the question of like use case in terms of how many users does it have, and does it compete in terms of like a product, right? You're kind of externalizing that work. Personally, I think that if you look at the energy security of proof of work, it's useful. And I think Bitcoin itself has kind of demonstrated that in terms of its hardness. But, and then we have a lot of things that, are called proof, like useful work, but are more profit swapping services, right? More or less, where it's like, okay, well, if you perform this function, we'll, pay you in this coin. It's not really like a civil resistance mechanism. It's more like an economic exchange on top of something. So I don't know. It's an interesting question long term. In my personal opinion, we're not there yet, and there's still a lot of open questions in terms of the long-term economic assumptions. But that's not sexy marketing, so I should probably shut up and go to the next question, right?
Okay. All right. Well, there's a couple of questions here, actually. Well, let's start with this one. Am I shadow banned? No, you're not, Harry. We just haven't gotten to you yet, but we will right now. Let me go and find your question here. Here, okay. So, are you interested in creating a Cardano Catalyst proposal where we can accelerate the development of Ergo's Oracle technology? And so he also says that I really need oracles for my DApp, and I'm ideologically aligned most with Erg. So I mean, I'll speak on it from my side. I think that it is a very interesting pathway to go down. Oracles are needed, and I think oracles on Ergo are really well built. Now, to implement them, when I saw that Harry was actually asking other questions about implementing them on Palmyra. So we have an Oracle network that was designed by 01x, the company that also designed our tokenomics, that we're going to be utilizing for on-off-chain data validation. Aside from that, of course, as the platform expands, I believe there's going to be need for other oracles and other types of oracles and other kind of what I consider incentives pockets, right? Because if you are kind of working across several ecosystems, eventually there's going to be some assets that are going to go on Ergo, right? Because we're going to be working with Ergo and Cardano, and we're going to be working with Rosen. So eventually there's probably going to be a use case where we are going to need oracles on Ergo to do stuff on Ergo, or use them on Cardano somehow. Again, there's a lot of possibilities here because of the technology that is being put out. Where can they be utilized? So from our end, I believe that it would have to be in a part of a challenge or proposal we put out for potentially entering a region or accelerating a region. So we were discussing, and this is really early, but we were discussing potentially doing something in Turkey or one of the other regions that we're also entering as the platform. And there, of course, there's whenever you have off-chain data that needs to make it on-chain for your system to work, you're going to need oracles. So potentially there, but again, it's still really way too early for us to talk about it. But I see it as a possibility. I definitely see it as a possibility from the Palmyra side and from the Zengate side. And if the opportunity arises, we would definitely, I think we definitely consider them, and if not, definitely put them into the proposal. So what do you guys have to say about that?
I can go, Joe. I'll go first. There was actually a fun talk in Dev Update a couple of days ago. Kushti, right before he got sick, put a screamer in there as a question of, "Hey guys, what's next?" And there was a lot of talk about Ergo providing oracles for various things, stock indexes, sporting bets, other commodities as well. And the sporting bets seem to get a big tick up too. So from what I understand, it's not that difficult to take the framework that they've made. Is that Green Hat or PG4? It's a couple of those guys. What's his name? Scala Hub, right? Those guys working on Oracle Core and spinning it up with another data source coming into it once everything's flying and ready to go. So I personally think that'd be an amazing thing and a huge boom to Ergo. I mean, could you imagine if Ergo had this sold their oracles for sports betting to, that just sports scores in metrics of like how many touchdowns, yards of the game and that kind of thing. Or I think Cannon mentioned tennis just because there's so much individual betting on different things in tennis. Imagine if that was brought to Ergo in the form of oracles and we either dumped them on other chains or they just read from our chains from it. And then all the DApps you guys could build just from those kind of things. I mean, I always say this, and I truly believe in it, and I don't think people recognize what it's like. The floodgates of technology, and I'll say it again. There's a professor at Cornell that always said this. He said the technology for VR has been around forever. Like in the 80s, he said they were putting goggles on their heads. He said, but the one thing they couldn't figure out is the latency. And up until that point, when they finally figured out the latency, it's just like the dam gates opened. And all this stuff just boomed right after that. After that one little hiccup, that one little sticking point was solved. So same thing with this kind of thing. You bring one little thing in, like, let's just put numbers in a trusted oracle distributed by a bunch of members that are being paid out in this token. Maybe it takes a percentage of the bets or that kind of thing paid back. And once you get those little numbers on the chain, the ecosystem that could evolve from that is immense. So I think it's I've been running the Gold Dexy Oracle since mainnet, and it's been great. It's been working great. I check it once in a while. It's been super rock solid and steady. There's 14, 15 of us, and they're selling more. I think the auction just ended yesterday, and there'll be more until we get to 32 or 30 sales. But imagine those distributed. I mean, what a selling point is that here. It's not like Goldman Sachs running an oracle by themselves and posting the numbers by themselves. Here's 30 independent people, not connected to each other, all verifying and reporting on chain the numbers. That to me is something that I would definitely back and bet on and those kinds of things, as opposed to some centralized entity controlling it itself. Joe, what are your thoughts?
I think that oracle is one of these terms that is all sexed up. It's a data feed, right? At the end of the day, it's a data. It's
It's just putting numbers on the damn chain,
right? And the real question is what are like the assumptions of honesty around that data? Is it hardened, right? And we have this term oracles, right? And people get really excited about like, oh, it's an oracle. Well, at the end, it's just pulling from an endpoint or multiple endpoints, and by one party or many parties, and it's aggregated or it's not. But if you look at like hardened data, yeah, there's a interesting use cases long term, especially if we get this idea of collectives, and I think that what that requires is tools for people to collaborate. And I know that like we kind of have our federated gold group, right? So if you're talking about like catalyst proposals specifically, I would think that having those community-based organizations would be the best like party to potentially apply for funding or support in terms of their growth. And I would hope long term we actually see multiple groups of oracles that potentially can have the right incentives in place to have hardened data. But we also have to ask, like, what's the use case in need, right? And that's where I don't know. I tend to think that when you're talking about like replicated database, which is, it's a non-sexy way to say blockchain. It's inefficient, right? If you look at hardened data, it's inefficient. So then, there needs to be a financial use there to compensate for that inefficiency. And in the case of oracles, it's trust is going to be the most important aspect, right? So I think that you kind of also have to frame it in a way that, I don't know, makes sense. I can say like at Ergo, there's always kind of been this idea, like if you're going to go through all of the inefficiency of storing a ledger everywhere, having a financial use is probably the best product market fit because trust is going to be so important there. So if multiple oracles come up that have a financial use case and people, want hardened data, it probably, will make sense. What that's going to look like exactly, I don't know. Let people figure that out.
Yep. All right. Well, we're getting close to the wrapping hour, so let's take one more question. And this is actually from our friend Ergo Minnow. And so, do you believe marketing in the traditional sense is needed? Does grassroots marketing have a plateau now that first mover advantage doesn't exist anymore? So, I have kind of, my attitude changed towards marketing the more I got into Ergo and kind of the more I got into the real, the real deal of decentralization. So let's look at what marketing is for a blockchain. Okay, so what are we marketing? Who are we marketing it to? And what is our return on investment for paying for this marketing, right? So, for example, I mean, if you have something that's straightforward, that's consumer, consumer items, say like a car, right? So you market, you advertise it, you have an audience that buys cars, right? The same for services, say you're an accountant, right? And so you advertise to people who need accounting services. A blockchain is it's like advertising a country, right? And yes, I know some people say, well, you see advertisements for countries. Well, they're not advertisements for countries. They're advertisements for things that you can do in countries. So like you'll see, visit, beautiful Greece. Well, it's not about just the country of Greece telling you to visit it. It's actually the travel, the department, the Ministry of Tourism or something of Greece that's paying for this because they want people to come in and as tourists. So the question is, what exactly are we marketing? right? So what exactly are we marketing on Ergo? Just marketing Ergo itself, I don't believe would be prudent because it's too broad and it's too abstract for the average or even the mainstream blockchain people to really understand. So you have to think about parts of Ergo that would be marketable, like say, for example, Rosenbridge, right? So Rosenbridge has a very it's a lot easier to explain why Rosenbridge than why Ergo, unfortunately, but it is because bridges have they're at the forefront of all these debates and discussions and everything. Bridges get hacked, bridges get like bridges get centralized, decentralized. So it's people are thinking about the stuff, the industry's thinking about the stuff, so it's easier to get traction and market something like that, right? A blockchain like Ergo, I just don't see there being any real need for actually paying somebody to advertise it, because number one, who would you pay? And number two, where would they advertise it? Like I said. Also, you got to think about this, right? So if we are truly the spiritual successor to Bitcoin, we have to think about it. Who advertises Bitcoin? Does the Bitcoin advertise Bitcoin? Is there a marketing department in Bitcoin? Does Bitcoin spend money in marketing? They don't. Why is that? Because they have others marketing it for them, because there is a defined understanding and perception of value from Bitcoin, right? So it's digital gold, they say, right? So it's digital gold. So they have their construct of understanding what it does, right? And so then you have the community that basically are the top value consumers from that particular ecosystem. Advertise it for you. You have your now you have the Bitcoin ETF people advertising it for you. You also had all these Bitcoin funds advertising it for you. And the sailors of the world and whatnot, and the Max Kaiser of the world and whatnot. And I think even though those guys are kind of clowns, but that is, I believe, the best way to advertise something like this. And no, but you know what? Ergo Minnow followed up, said doesn't need marketing due to its first mover advantage. Yes, it did, because before that, people didn't really care about Bitcoin. It's like. It had first mover advantage, but not for long. And that's not really what made it big. What made it big was actually people understanding what they can use it for, and then advertising those use cases, and then wanting to get more. And that's what we really need. We really need to advertise the use cases. And I think the community is the way to do that. And I think that is the most organic way and the most prudent way to bring advertising and to bring new users and new eyes into the platform. So I mean that's just my way of thinking in this. What do you guys think about this?
Who wants to talk first, Joe?
Go for it, QX. I'll put on.
Great. So I only know this as coming in from a community member and my own perspective, of course, and it really kind of also mirrors similar to what Dan is saying. With the way that Ergo started and the amount of funds that they have for what they're doing, I understand people's frustration with, why can't the EF, pump $50,000 down on this and that and those kind of things. And from being in the thick of it and seeing what some of those results do, let me give you a couple examples. I spent about $250, $300 on a Twitter campaign for a week. And while we had something like 4 or 5 million clicks, that didn't really correlate to what we saw in the database backend of visits to the website. So that didn't feel like it did too much there. There's also those guys that troll around chat that I spoke with the other day about getting our article up on the Binance blog. So I was like, all right, fuck it. I will, I'll pay, I dropped them down, I think, to $60 for CMC and Binance, so $30 a post. And he posted the two things, and I went and looked at it, and we're looking at maybe like a under 100 views after a week or so. So there's a lot of different things that may seem like great ideas there, but are not. And yeah, so that's my point there. That from now that I'm essentially not on the inside, but I'm actually actively trying to pay and monetize, not monetize, but to pay funds for these actual results. It's a difficult game and a risky game. And that being said, I would much rather the EF spend their funds on core development, on supporting projects that ask for the funds, on supporting the SIGs when they actually can organize and come up with a great idea to propose and get money lent to them from the EF. I feel personally that's their job to do that, or their responsibility, not job, essentially. And sure, we're not going to be on the front page of Binance with, oh, you guys, the headline, check out this beautiful $billion cap gem kind of thing, or any of those catchy headlines. But I still stand by the idea that Ergo is going to build something that can't be ignored, and we already have. And if we keep doing things like that amazing Kenya cooperative, just posting that article, the responses we got on Twitter just from that article about crypto actually fucking doing something and being useful in the real world and integrating with that, got so much more feedback than, I feel like things that I paid for. Things like Dan Zengate and Palmera, the stuff that's actually going to happen and is going to be utilizing the blockchain for. That's the kind of stuff that sticks around, not these shit Tom and Jerry coins that are advertising all over the place and pumping these market makers full of money so that their coin stays pumped for a week so they can dump on you a week later. I mean, that's a sticking power of Ergo, and I think the original EF members really had that in mind, and kudos to them that they really stuck to it, and no matter how hard it is, getting pounded from the community for advertising and that kind of thing. So I think we're really seeing the benefits of this. Here's a chain that's stuck around since 2019. A smaller market cap, but the amount of shit that we're able to build and continue to build, like I said, I think Ergo's key is that it's going to be impossible to ignore us at some point. And we're still going to be around. And I meant to say this the other day, too, on something. Like, if the EF runs out of money, who the fuck cares? People still like Ergo. They're still going to build. I'm not being paid to do it. Other people are not being paid to do it. We're doing it because we enjoy Ergo and we believe in the mission and what it does. And we believe that perhaps also on a monetary level that our investments are going to pay off in the future eventually when Ergo is utilized a lot more in the mainstream. So, yeah, that's my take. Might not be popular, but whatever. It's early.
Yeah,
is it early, Joe? Tell me how early it is.
I'd say 10 now.
Oh yeah,
yeah.
And
well, that is, like, if you look at the number one complaint I get in like the DMs, like, Armenio, you asshole, you suck at sales. You're the worst hype man ever. And okay, it's true probably. But if I really look at the value of, like, let's use Bitcoin here as an example. One thing that Bitcoin did well, in my opinion, is there were a lot of people that understood the philosophy and went around educating. They went around writing books. You look at something like the Bitcoin Standard. You look at why is this philosophy, why is this technology important, right? And I think that educational base is really the most valuable aspect you can build long term, right? No, I can get on Twitter, and there's people that are always screaming, right? There's God knows how many, tokens or what coins or whatever out there, and they're always screaming, we're the best, greatest technology ever, yada, yada, yada. But if you read into it, there's absolutely zero, I don't know, like, context or value to the statement. It's a face melter, 100x gym. We're going to be on, the Dubai Yacht Club with models. Like, and it's a picture of, a frog that's upside down with, and, like, I don't know how to process that. So for me, I've always been like, okay, well, the biggest question is why Ergo, right? And why cryptocurrencies, right? If you go back to what we were talking about earlier in terms of, like, Oracle data, why? Like, how is this protocol or system set up, and why does that matter? And I think that as you educate, if you educate people in this space, they learn to recognize that type of mentality. To me, is it's entertaining to some degree, right? But if I look at like the intent of why I'm here, it's based on principle. And I think that the best thing that we can do as an industry is, in terms of actually like trying to have some sort of resistance to where the world could go in 20 years, is we need to grow the fuck up.
Yep. That we do. That we do. All right, guys, listen. I think this is a good place to wrap it up. Joe gave a good kind of like closing remarks, I think. And we had some really good questions today. Really good questions. All right. Well, listen. Thanks everyone for joining, and thanks for being here, Joe. Thanks for being not wearing a hat today, QX.
I feel left out.
Yeah. I know you were struggling with the hat thing. You're like, oh my God, my hat. What do I do? What do I do? It'll be okay. It'll be okay. Anyway, all right, we're gonna sign off for today, but same time, same channel next week. And well, I will see you there. Hopefully Joe and QX will join as well. And if not, I will razzle them for it.
And I guess I've been roped into the weekly update, so I'll get a public beatdown if I skip that.
Oh yeah. And don't forget, everybody, come in 1 hour, 45 minutes. Come to the Twitter Spaces with Kadana, Flux, Lithium, and Ergo. Please come join. Put it in your ear.
All right. All right, everyone. Thanks for joining, and we'll see you next week.